Okay, I just want to show you how much money could be made off of a regular day, with a big move up. Okay, so this was April 30th, a few weeks ago. This was a day where it moved up around $10, $11. So it opened up around here. This is 6:30. You see it says 6:35, 6:40. It opened up tanking down to the bottom. I got this RSI indicator. This is the relative strength index. When you see that it's at the bottom and it's red like this, a reversal is usually about to happen. So let's say we noticed this. We sat the market for 10 minutes. We waited till 6:40 and we tried to buy one of these reversals. Now, right now, the bottom of this, let's say we just called it at the bottom. The bottom of this was at 462.64. It happened at around 6:55, right? So what I'm gonna do is I'm gonna go to my ThinkOrSwim, right? So I'm in on demand mode. So I went to April 30th at 6:40. I'm gonna go to 6. Maybe it happened around 6:55. So let's go 6:56. Okay. So now these are what the contracts costed. As you can see, around that time, the price was 463, but I think it was dropping. We're trying to get 462. I mean, because we know it's about to go down there, so we want to try to get the lowest entry. But even if we did get an entry right here, what we would do is we're looking for the strike price. I think this is still loading. Let's go. Okay, so let's say we did buy at 462, if that was the price. This is at 464. I think it's still loading. It says real time is paused. Yeah, go ahead and play that. Is it loading? Okay, you see it's dropping now. Now it was paused. So now it's dropping, and it went down to 462 at some point between 6:55 and 7, right? So we're just trying to catch that low. We're trying to catch this bottom wick where it hit support. We're trying to get it around there. So it happens somewhere between 6:55 and 7, right? So we want to try to catch this. Where was that? 462.40. As you can see, it's still dropping. 462, 463. It's playing around, but it's gonna drop to 462. And once we catch that bottom, we're gonna buy some calls, because we know it's gonna go up. So we're gonna buy some calls. It's almost there. So let's try to get it right when it hits. So what we're gonna do is, since we know it's at 462, let's say we predict that it's gonna go up $5. It's all the way at the bottom. So we're gonna predict that it goes up from 462 to 468. That's $6. Well, it's almost at 463. So let's say 468 is the price. We're gonna drop some bread. We're gonna drop $500, or we could drop 300 on 468. We'll drop 100 on 4. It's gonna get more expensive the more we go down. It gets cheaper the further you go up, because it's unlikely to happen. So the prices of these contracts are real cheap. So let's say we drop 300. Fuck it. Let's say we drop 500. Let's say we drop 300 on 468. So 468 is right here, right? 468 contracts are going for $105. It says $1.05, but you're buying them times 100. So now they're 103. Okay, look, it's 462.80. We're good. This is where we want to be getting in at. It's almost at that point where we wanted at. We want it in the low 462s. The lower the better, because we're about to buy a call saying it's going to go up. So we think it's going to go to 468, right? So we're going to drop 400. Let's drop 400 on 468, right? Since we think it could go up around $5 or $6. All it needs to do is go up like $4. But if it goes up like $6 or more, then these contracts are going to be worth a lot of money. So look, they're $100 right now a piece. So now what I do is I'll buy, fuck it, let me just buy 3 of these shits. I'm gonna buy 3. So I don't want to put all the money in this one trade. So I bought 3 of these. You see, I spent $309. Look, the price is at 462.50. 59. We got it at a nice price. So I'm gonna buy those. So now I'm 300 in. So now let's go back. Let's go to 469. They're only $81. They're $78. Let's go to these. They're $79 now. Let's get 3. Let's get 3 of these. So now, what are we in? $309. Now we're in another $237. Now this is risky. These are risky bets. So now let's just do this right here. 237. So now we in about 250 in a trade. But let's go safer. We want to go safer because a $6 or $7 move is a big move, right? So we want to go like, let's say it don't make it to 468. It makes it to 467. These are 125. So let's say we buy 2 of these, right? We buy 2 of these. That's gonna be 250. So now we about 750. We about 750 in. So now let's see. Just say it don't go to 467. It go to 466. That's just thinking it's gonna go up. Look, it's already back up to 463. Let's hurry up and buy this before it keeps going up. So this one is $153 a contract. Let's go ahead and buy this. Let's buy one of these. 150. So let's say we in about $850 right now. We bought all these contracts. We bought a 466, a 467, a 468, and a 469. All of these expired today, but we think that the price is gonna go up. It's already up almost $1 from where we bought in at. So look, you're already up $186, and you only spent what you spent about $800. So now we think it's gonna go up from 464 to 468. It just needs to go to 466 for us to make money. We think it's gonna go up to 468, right? So let's fast forward till the end of the day. The end of the day, ultimately, it ended at 476. It almost went to 477. So let's see how much money you would have at this time. At the end of the day, it would be 12:55 our time. So let's fast forward and see how much money you would have. And remember, you only spent around $800, and those are called out the money contracts. So now fast forward to 12:55, and this is how much money you could make off of an $800 contracts if you timed it right. Boom. This is at the end of the day. This is 12:55 now. And this off of you spending $800, maybe $850 on some contracts. Remember, you bought one 466, one 467, three 468s, and 3 469s. Those obviously went up the most because you bought 3 of them. But shit, that 468, that don't look, that 466, that 467, those look good. That 467 looks real nice. Now you bought 2 of those. You bought 1 of those. Well, you should have bought more of these $900 ones, more of the 466. See, I might have went too far out the money. That's where the money, but these contracts were more expensive. They were like $150 a piece. All these contracts below were cheaper, so it was less risk. But yeah, that's how much you would have made off of just spending like $800, $850 on a day where you went out the money and it passed your out the money strike prices.